Welcome back to The Explainer. So, if you've been watching the tickers lately, you already know we are unpacking what can only be described as a historic super week in the global financial markets at the close of July 2026. The sheer scale of the chaos, the flash crashes, and honestly, the absolute miracles we saw in the charts this week were breathtaking. I mean, we literally watched billions of dollars get wiped out in the blink of an eye, while massive fortunes were made just as fast as geopolitical panic reshaped the entire board. Today, we're going to break down all the data, figure out exactly what happened, and make sense of this turbulence.
Today, we are breaking this down into four main battlegrounds. First, Forex, where the US dollar took a massive slap. Second, commodities, with oil soaring. Third, equities, focusing on Amazon's miracle. And finally, crypto, and its sudden stumble.
All right, let's jump straight into battleground number one, Forex, the USD slap. Man, what an absolute nightmare for the dollar.
So if you were holding the greenback this past week, you were probably sweating. The sell-off was aggressive. The DXY index just slid right down, dropping 1.9% to hit the 99.8 mark. Any hopes of pushing into higher price zones were completely shattered. And honestly, it all boils down to the macro data. U.S. second quarter GDP came in surprisingly sluggish at just 1.5% growth. Add in some very clear hesitation from the Federal Reserve, and that interest rate advantage the dollar usually leans on, yeah, it essentially vanished. Investors just started jumping ship.
But the real climax of this dollar nightmare, that Thursday night flash crash. Just a total vertical drop on the charts for the US dollar against the Japanese yen. We're talking plummeting straight down into the 157 to 158 zone in just a matter of hours. And look, this wasn't just organic market flow. This was a targeted strike. The Japanese government stepped in, aggressively selling dollars and buying up yen, absolutely decimating existing positions.
Which leaves us with this crucial closing number, 157.4. The Bank of Japan actually decided to hold their interest rate steady at 1.0% on Friday, which, did cause a tiny bounce, but nowhere near enough to save the week. A 157.4 close means if you were in carry trade positions, your margins got wiped, and it dragged almost all the other yen crosses down by a massive 3 to 4% right along with it. The shockwaves were felt across the entire board.
Moving on to part two, commodities, oil source. This is where geopolitical fear really takes over. So while Forex was punishing the dollar over sluggish data, commodities were running on pure, raw fear. Just wrap your head around this number, 40%. That is the staggering growth oil saw in the single month of July alone. I mean, think about it. The US economy is limping along at 1.5% GDP growth, but oil is just exploding. It tells us that the fear of global conflict is completely overshadowing any worries about an economic recession hurting energy demand.
And Friday's close was just wild. We saw a massive 2.8% jump in that final session alone, launching WTI up to $86.08 a barrel. The driver here is 100% panic buying. You've got speculators and institutions frantically hedging against the risk of the US-Iran conflict escalating, plus those mounting fears of a potential blockade at the Strait of Hormuz. When supply routes are on the line, the market immediately prices in the worst-case scenario.
Now, contrasting that explosive oil momentum, gold was actually pretty quiet. The US PCE inflation report came in right on the nose at 3.3%, and gold basically just traded sideways after that. It built a really solid base thanks to that weaker dollar we talked about, but it definitely didn't join oil in the stratosphere. Instead, it's just in this steady tug of war, keeping a downward target of $3,908 an ounce firmly in its sights.
All right, Act 3. Equities, Amazon's miracle. Totally driven by fundamentals.
If commodities were all about fear, equities were all about corporate fundamentals this week, because despite that sticky 3.3% inflation hanging over everything, Wall Street still finished the week in the green. But man, it was a massive tug of war in big tech. On one hand, you have Amazon just booming, rocketing up 15.3%. Their AWS cloud division reported insane profits, basically crushing any lingering doubts about an AI bubble. But on the other hand, Apple took a harsh 7.4% hit, thanks to pessimistic revenue forecasts tied to severe supply chain issues. But here's the crazy part. Amazon's rally was so colossal, it essentially put the whole market on its back and completely offset Apple's slump. Because of that huge tech divergence, here is how things settled out. The Nasdaq 100 closed at 28,190. And keep in mind, it's still down nearly 12% from its historical peak, making it the weakest link right now. The S&P 500 actually shows some solid resilience, pushing back Wednesday's drops to close around 7,485. And the Dow Jones finished at 52,420, though current analysis suggests you probably shouldn't be buying the dip just yet, as we're targeting a deeper drop down to 51,000. Finally, we hit battleground number 4, crypto, the stumble. And honestly, a pretty unexpected drop.
So, given the whole tech miracle led by Amazon, you'd probably assume high-risk digital assets would be joining the party, right? Well, that begs the question. Why did crypto bleed out while traditional tech soared? Because that's exactly what went down. While Wall Street was cheering for AWS, Bitcoin was getting slammed with heavy selling pressure. It tried to push past the $65,000 mark early on, but the sellers were just too aggressive, knocking Bitcoin down over 4.5% to settle in the $63,000 range. The momentum just totally snapped.
Let's break down why this happened, because we basically had a triple threat of catalysts hit all at once. First up, Coinbase. Their stock tanked over 10% after a pretty bleak earnings report. Second, MicroStrategy, the absolute whale of the space, reported a staggering $8.2 billion net loss for Q2. A number that massive immediately triggered rumors they might have to liquidate some Bitcoin just to free up cash. And third, the Federal Reserve minutes dropped, revealing that up to 3 Fed members actually voted for rate hikes. That kind of hawkish news is basically a psychological hammer blow for high-risk assets.
So, taking a step back and looking at the whole picture, we've got a bruised US dollar, oil absolutely skyrocketing on war fears, a stock market propped up entirely by Amazon's AI dominance, and a crypto space struggling with massive corporate losses and hawkish Fed threats. It leaves us with one massive question. After a week of such extreme chaos, where exactly is the smart money going to position itself for August? These wild divergences prove that the old market correlations are totally breaking down. The next few weeks, they are going to be absolutely critical to watch. Thanks for hanging out with me for this explainer, and definitely keep your eyes on those charts.